let's talk about the elephant in the room, which is what is bothering markets. Now, this is a tricky one because there's no real way of knowing one way or the other, so it's always a guessing game. But going by all of the social media chatter yesterday, it's a couple of factors. One is FII flows, and Samina, like you were talking about, that before June 4th, they might be sitting on the sidelines. You're not going to see some of that money coming in. And on the other hand, the voter turnout figures have also bothered the market. So I'm just going to start by what was the voter turnout and why it is becoming a concern at all. So let's just pull that up. 3 phases of the election has been done. So nearly 50% of the election is pretty much over. Bulk of the seats are already done. Now, in all the 3 phases, you've had a voter turnout lesser than 2019. Now, just to qualify it, and a point my colleague Sajit Mangat was making in the newsroom, it's on an absolute figure. Remember, every 5 years, your number of voters goes up because the population increases and the number of eligible voters go up. So in absolute terms, there will always be more people voting, even though the percentage of those who actually turn up might be lower. So having said that, in phase 1, you had a 63% voter turnout versus a 70% in 2019. In phase 2, it was 61.4% versus a 70% in 2019. And in phase 3, it was a 60% versus a 67% in 2019. So between 6 to 8% lower voter turnout has been seen in all 3 phases. Now, the next logical question is why, and why does it matter? So as to the why, could be a variety of reasons. One key one possibly is that we're currently going through a heat wave in a lot of the seats that have gone to voting. Temperatures have been above 40 degrees. So that pretty much cuts out, the number of people willing to stand in line between, say, an 11 a.m. till about a 4 p.m. So the number of hours where you can bear to stand in line and vote becomes lesser. Perhaps that's something that the Election Commission could have thought about or made alternate arrangements, but that's a theoretical discussion right now. Now the question is, does low voter turnout impact election results? And here is where it gets important. And this is really where the big question mark comes. Now, historically, at least for the BJP, of the 5 times they have come to power, 4 times have been on the back of higher voter turnouts. So does that mean if it's a lower voter turnout, it spoils the chances of a policy continuity or of any one party coming to power? There is no clear data linkage which could bring you to this conclusion, because what matters at the end of the day is of every 100 people who come to vote, which party manages to get its supporters to the booth. And that's something that we'll have to all see on the 4th of June. So difficult to predict that right now. The other big question, and guys, I want your view on this as well, is this whole thing in the market right now that is 400 par becoming 320 par. My point is that for any kind of policy continuity or to run a government effectively or to make decisions, because at the end of the day, that's what matters to people, investors, etc., you need 273. So does that 400, 320 or any figure above 273 actually matter in real terms to any outcome?
Yeah.
Is the question.
So I think most market participants are saying that if there is a disappointment, if the voter, if the actual outcome is not 400 par, but let's say sub 350 or whatever the number might be, most people have to say that even if there is a disappointment, it might last for a day or two, because the markets are aligned to the fact that there is political continuity, and that is what effectively matters, which is what you're saying.
Does that also mean policy continuity?
You could argue
as much
right?
ease?
Yeah, I mean,
absolutely. Let me give you an example. The Narasimha Rao government didn't even have 272
and
by
still
itself.
Managed to push
it was
for
so
everything.
before 2014, you have had in India successive coalition governments who have done whatever they needed to do. So your 1991 reforms, etc., were all coalition governments. You need 273 to run a government, and then the rest is just a plus. So a vanity figure or a political slogan does not, in effective terms, translate to what you can do when you're sitting in government. So
Yeah, well, that's, I guess, what is most important, right? It doesn't really mean very much apart from just the fact that it doesn't sound as great, 400 versus 270. But a couple of other things that potentially, which is beyond elections, that could have seen a little bit of pressure on the street. And this, of course, are reports based that we have seen. What you did have last month was India amending its double tax avoidance agreement with Mauritius. That led to a little bit of pressure coming in, which led to FI selling. What we also know that Luxembourg domiciled funds have sold Indian equity to the tune of $256 million. You're also seeing a slowdown in inflows coming in from the US and Japan. So while Luxembourg is Europe, US and Japan is seeing slower inflows. A delayed rate cut from the US has also meant that emerging markets like India historically have suffered. What we've also noticed from EPFR data is that the funds in India that have seen an inflow have largely been ETFs. So that is one more thing you want to keep in mind. The broader market stocks have been the flavor for DIIs, and that continues to remain the trend. But foreigner selling has been backed by the fact that you've got higher rates in the US, you've got valuations that one may argue are on the higher side. The 12-month forward P of the Nifty stands at 19.3 times, which is still at a 5% discount from record highs. Nifty 50 valuations, while look good, the broader market stocks look extremely expensive, and the expensiveness is being inversely proportional to capitalization, quality, and risk. And some are unhinged. That's what analysts like Lara believe from fundamentals and reality, and are entirely based on optimistic assumptions, wrong valuation methodologies, and unrealistic narratives. This I'm quoting Elara, and this is what they've actually put out in the report, saying these are some of the worries that the street is probably dealing with. But the fact remains we are priced to perfection, so anything that the markets would want to get nervous about, they're choosing to get nervous about, and that really is what's happening.